A very good morning, students. Our session of Financial Management 1. Now, in the previous session, we have discussed about the different financial institutions, the special financial institutions. The last institution was Exim Bank, that is Import-Export Bank. So, today we are going to start with the new source of finance, that is commercial bank. Yes, as we all know that commercial banks are there who provide the direct loan financing to the organization, and with the help of this loan the industries and the organizations are able to grow, they are able to develop. Basically, there are two types of commercial banks. The first one is private and second one that is nationalized. Now, as far as the private commercial banks are concerned, the authority of private commercial banks are in the hand of private sectors, while nationalized banks are those which banks are controlled by RBI and government. That bank will be known as nationalized bank. Basically, commercial banks provide borrowed money, that is loan to the organization, and through which loan the organizations are able to fulfill their financial requirement, whether that is for the short period or it is for the long period of time. So I think it is already discussed in our introduction session. So let's move towards the functions of commercial bank. Now, the functions are divided into mainly two parts. The first one is traditional function and the second one is non-traditional function, that is modern functions. Now, traditional functions are those functions that are going to be carried out by each and every banks from the number of years. So that traditional functions are also known as the basic functions of the organization. So now let's discuss about the traditional function. The first function is to accept deposits. Yes, commercial banks normally accept the deposits from the savers or from the investors who have additional money, and that additional money, the main purpose of that additional money, that is to make an investment, and out of that investment they wishes to grow more. Then after second one is to provide loans. The main function of commercial bank is to provide different forms of loan, and it is totally based upon the nature of the person or the nature of the organization who wishes to take this loan. Then after different types of loan, then the amount of loans are also going to be considered. So we can easily say that banks are the bridge between the savers and the borrower, or we can say in another term, the persons who are in the need of finance to the persons who have excess of the finance. Then after the third one, that is to create the credit finance. Yes, with the help of commercial banks, the credit finance is easily created. They not only issue the deposits. So creation of credit is there as far as the banks are concerned. Now the bank create non-material things and then sell it, and that is known as a credit. Now non-material things are those, means they are going to create any notes. Credit notes are there, then after different bills are there, which is to be created by bank, and now bank is going to sell this credit in the market, and out of that sale they are going to create a huge amount. Then after, the next function is to make payments. Yes, on the behalf of customer, on the behalf of clients, banks are there to make the payments, and it may be in a different forms. The forms is totally based upon the choice criteria of the institute who wishes to make the payment of their transactions to the third person. The next one is they are performing the functions for the purchase and sale of securities. Yes, banks are going to purchase the different securities, and they are in the position to sell those securities which is trading in the market. Then after, provide services to its customer, financial organization, and provide assistance to other banks. Apart from providing finance to different class of people, to different class of investors, commercial banks are there who gives a different kinds of services, advisory services, financial services, managerial services to their clients. So these are the main traditional functions of commercial bank, or we can say that these are the basic functions of each and every banks. Now, non-traditional functions. Non-traditional functions means we can say that the modern functions. Those functions are the basic functions. But as far as the modern era is concerned, as far as today's world is concerned, now it is required for each and every bank for the expansion of their services. When they are going to expand their service, when they are providing additional functions, then and then the banks are able to sustain in this competitive era. So now let's have a discussion about non-traditional functions. The first one is safe deposit wallet. Second one, that is safe custody. Then after, dispatching money at other places. Then after, issue of credit notes and so on. Then after, transactions of foreign exchange. Then after, act as a referee, act as an underwriter, act as an advisor, and provides guarantee at the time of payments to the other party and other facilities to their customers. So these are the main functions of commercial bank, that is divided into traditional and non-traditional functions. I hope you all are clear about it. Now let's discuss the another point, that is bridge financing. Yes, bridge financing is really very interesting to understand. Now take an example, કોઈ એક ઓર્ગેનાઇઝેશન છે કે જે લોન માટે અપ્લાય કરે છે, કોઈ પણ બેંકને અપ્લાય કરે છે અથવા કોઈ પણ ફિનાન્શિયલ ઇન્સ્ટિટ્યુશન્સને અપ્લાય કરે છે. હવે લોન જ્યારે અપ્લાય થાય છે ત્યારે ઇમિડિયેટલી એ સેન્શન નથી થતી, કારણ કે ઓર્ગેનાઇઝેશનની ક્રેડિટ વર્ધીનેસ ચેક કરવી પડે છે, ઓર્ગેનાઇઝેશનની ફિનાન્શિયલ રિક્વાયરમેન્ટ છે એને ચેક કરવી પડે છે, અને દેન આફ્ટર બેંક ઓર અધર ફિનાન્શિયલ ઇન્સ્ટિટ્યૂટ પછી એ જે લોન છે એ સેન્શન કરશે, અને લોન સેન્શન થશે પછી વિધિન 2 to 3 months ઓર્ગેનાઇઝેશનને એ અમાઉન્ટ પોતાના અકાઉન્ટમાં ડિપોઝિટ થયેલી જોવા મળશે. સો ઇટ ઇઝ વેરી લેન્ધી પ્રોસેસ, ઇટ ઇઝ રિયલી સમ હાઉ ટાઈમ કન્ઝ્યુમિંગ પ્રોસેસ. હવે આ જે ગેપ રહેશે 2 to 6 monthનો, કે જેમાં એકચ્યુઅલી ઓર્ગેનાઇઝેશનને ફિનાન્શિયલ રિક્વાયરમેન્ટ છે. ઘણી બધી વખત એવું થાય છે કે ઓર્ગેનાઇઝેશનને પોતાની વર્કિંગ કેપિટલની નીડને સેટિસ્ફાઈડ કરવા માટે લોનની રિક્વાયરમેન્ટ છે, અને જો લોનને સેન્શન થતાં વાર લાગશે તો એ વર્કિંગ કેપિટલની રિક્વાયરમેન્ટ છે એ ફૂલફિલ થશે નહીં. સો નાવ હિયર ઇટ ઇઝ અ બ્રિજ ફિનાન્સ, એન્ડ ધીસ બ્રિજ ફિનાન્સ fill the gap between this buffer time. Means this time in which the loans are going to be sanctioned but yet not sanctioned, the institute do not receive any money from the bank or any financial institutions. So in this slat time period, the organization is going to acquire a short-term loan, and that loan is known as bridge finance, because this bridge finance is going to fulfill this buffer time, and organization enjoys finance in this slat time, in this buffer time. So now discuss about bridge finance. A bridge loan is a short-term loan used until a person or company secured permanent financing or removes an existing obligations. It is a loan up to that time period until an organization received the permanent financing from the organization. So જ્યાં સુધી તમારી લોન સેન્શન નથી થતી ત્યાં સુધી તમે જે ફિનાન્સને માર્કેટમાંથી કેરી કરો છો, જે ફિનાન્સને તમે યુઝ કરો છો, that finance will be known as bridge finance. It allows the user to meet current obligations by providing immediate cash flow. Yes, here there is no buffer time, there is no slat time, because when you are going to apply that, immediately you get the cash flow from that particular institution. Bridge loans are short term, up to 1 year, have relatively high interest rate, and are usually backed by some forms of security such as real estate or any inventory. Yes, bridge finance is a short term. The interest rate is really very high because it provides immediate finance to the organization, and when the time period is for the short period of time, then naturally the interest rate will be high. And bridge finance is totally a mortgage loan, because without giving some securities, no organization will provide bridge finance to the company. So it's all about the introduction part. Let's discuss further. A bridge loan is short-term financing used until a person or company secures permanent financing or removes an existing obligation. That is already discussed in the last slide. Bridge loans are short-term, typically up to 1 year. These types of loans are generally used in real estate business. Homeowner can use bridge loans towards the purchase of new home while they wait for their current home to sell. This is the best example of bridge finance. Bridge financing is defined as the method of financing which helps in procurement of short-term loans to cater to immediate business requirements until long-term financing is secured. Bridge loans are procured to cater to the working capital needs of the business or to solidify any short-term business requirements. Finance cost or rate of interest are very high. These financing methods bridge the time frame when the business is facing a cash crunch and the business is about to get capital influence from a long-term financing avenues. So, I think it is clear to you. As we already discussed about our bridge financing. So now let's start with the new topic, or we can say that the last point of our unit number 3, that is book building process. Book building is really very interesting one because it is a process by which an underwriter attempts to determine the price at which an IPO will be offered. કોઈ પણ ઓર્ગેનાઇઝેશન જ્યારે પબ્લિક ઓફરિંગ કરે છે, ફર્સ્ટ ટાઈમ પોતાના શેર્સને જ્યારે માર્કેટમાં ઇસ્યુ કરે છે, that is known as initial public offering. હવે બુક બિલ્ડિંગ પ્રોસેસમાં જે અંડરરાઇટર હશે કે જે person who takes the responsibility to purchase the unsold securities in the market. Now here the underwriter is going to determine the price of IPO. So here book building is a process in which the underwriter of our security is going to determine the price of our public offering, and through which this price they are going to sell the whole security in the market. Actually, it is a kind of bidding process. Here, underwriter is going to offer two prices to their investors. The first price is known as floor price, that is the minimum price, and the second price is known as a cap price, that is the maximum price. So now here investor is going to bid between these two price range. Suppose the floor price is 500 and the cap price is 550. So this is the price range. That is, the investor is going to invest between 500 to 550 only. No other option is applicable to them. Now at the end of the IPO, there will be the bidding process, and the investors who offer the maximum price for the securities will get the benefit of the price range. So this is the process through which the organization is able to control their price in the market. An underwriter, normally an investment bank. Now here the underwriters are nothing but the different financial institutions, the different financial banks are there. Builds a book by inviting institutional investors. Here institutional investors are the institute, the organization, the companies, the fund managers who are going to invest in a bulk, and their capacities are really very large. To submit bids for the number of shares and the prices, they would be willing to pay for them. Now, in book building process, it is very difficult for a single investor to bid the whole price range which is offered by the organization. So, underwriter directly approach the institutional investors who are interested in a large investment, and they want to gain with the maximum investment with the process of IPO. Now there are few points that we are going to discuss. Book building is the process by which an underwriter attempts to determine the price at which an IPO will be offered. So here financial institutions are going to decide the prices of the IPO. The process of price discovery involves generating and recording investor demand for shares before arriving at an issue price. Book building is de facto mechanism by which companies price their IPO and is highly recommended by all the major stock exchanges as the most efficient way of price securities. So here it is really very good process, because through book building the organization is able to save the interest of our investors. So there will be a no malfunction, there is nothing. Now let's discuss about the process of book building. The first one is appointment of lead book runner. First and foremostly, organization is going to appoint a book runner, which is also known as an underwriter. Second one, underwriting. Now the company is going to decide how much financial requirements are there and how much securities are going to be underwritten by the company through the lead book runner. Then after the third one, agreement with one or more stock exchanges. Now here company is going to have an agreement with either BSE or NSE. Fourth one, appointment of stock brokers. Now without broker, our book building process is incomplete. So here broker plays a very important role, because broker is a middle person who is going to join or who is going to meet the basic requirements of the company as well as the investors themselves. Then after, file a draft red herring prospects. Now red herring prospects is nothing but it is a kind of advertisement. Here organization is going to advertise themselves that we are offering an IPO through book building process. Then after, application cum bidding forms. Now here organization is going to issue the application form cum bidding forms, and they are inviting general people, they are inviting financial institution to make an investment in their company. Seventh one, bidding process. Now the bidding process starts. As we already discussed that there are two different types of price range. The cap price is there, the floor price is there. Now here the investor gets the benefit if they are going to select the maximum price which is near to the cap price. Then after, determination of price. Now at the last the price is going to be decided. Suppose if the price range is 500 to 550 and most of the investor wishes to purchase your security at 543, if the bidding comes to an end of 543, so now this price is known as price of the shares. Then after, the next one is allotment. Now the allotment process starts. Here organization is going to allot the shares to those investors who are or we can say that whose prices are very high in the bidding process. Then after, application from listing securities. Now first and foremostly investors are going to apply for the listing securities, and then the shares certificate is going to issued to them, and they are maintaining the records of the investors to whom they purchase the securities through book building process. So that's all about our unit, that is unit number 3, sources of finance 1. I hope it is clear to everyone. Now in the next session we are going to have our last unit, that is sources of finance 3, that is financial institutions and different instruments. So here we are ending our session and we have completed our unit number 3. Thank you so much.